After yet another very uneventful week in Bitcoin price action history, it is time to be looking at something a little bit different. We're going to be looking at the PMARP indicator, and I suspect that I will be making this ongoing series, most likely, called Skill Saturdays, where we go over different indicators that I use in my day-to-day trading, and in this case, we're going to be going over the PMARP, probably one of my most favorite ones. The PMARP is an indicator that myself and Caretaker made, and Caretaker obviously being the coder of it, myself providing the initial idea with it, and then he just made the magic, and we can get into it right now. First, before we get off, it is 100% free, and other than that, we can just jump right into it, starting off with the chart view over here, and I can bring you over to where we can see it. So first things first, what is the PMARP? Then we'll go over where you can find it, formatting, and then ways that you can use it. So the PMARP is the price moving average ratio percentile, or price moving average ratio. There are two versions of it, of course, baked within the same indicator. We're going to be going over specifically the PMARP version of it because that is the one that I use the most and find the most value in, but you might find value in the PMAR version as well. So what is it, as the name would imply? It is giving you, in statistical fashion, the distance that price action is away from the current specified moving average relative to the look back period. So that was a whole mouthful of stuff, but basically it comes down to this. When the PMARP indicator over here is high, that means high. That means my voice is cracking. I need to go back to high school. But no, when it's very, very high, it means that price is very far away from the current specified moving average. In this case, we're going to be using a 20 VWMA, and then it is obviously put into a statistical fashion relative to the look back period. So first things first, I think this will maybe make more sense once we get into some examples, but I'd like to first show you where you can get it. It is over here on the public trading view library. Again, it's 100% free. Just go over here to the indicators tab, type in PMARP, boom, it's that one by Caretaker. I have already hearted it. There's almost 1,000 likes on it at the time of this recording, and if you hit that, it'll bring up the default version of it on chart here. Now, just to make sure that we're on the same page, I will go into the settings of this indicator now just by hitting the cog. And if we go to the inputs, yeah, we can see, actually, I did set this one up to be slightly different. So you know what? I'm going to go back to what would be, of course, default settings. So that's going to be a 350 look back. That's going to be VWMA type. And I believe PMAR length is 20. And just to make sure that we're using the PMARP version of it, of course, we would select that in this pane right here. If you don't, it will default to the PMAR, just price moving average ratio. Completely different thing, kind of, and will not work in the fashion that I am presenting here. So we're looking specifically for the price moving average ratio percentile. That just means it goes one step further than the base and adds a statistical function onto this where you can see, what percentile it is away from current price action. All right. Okay. So we've gotten through that. Just double checking here. 20 VWMA, look back 350. Those are the important ones. Yeah, you can put a signal moving average on it as well. There can be some interplays with that. I myself don't have a humongous use for it in this particular demonstration, but you can certainly find some ways of looking at it, and we'll go over a very cursory one as well. All right. So now that we got that out of the way, we've got what is it, where to get, the formatting of it. Let's talk about how to use it. So as we blow up the pane right here, we can see that this thing oscillates between 0 and 100. Obviously 100 would represent 100 percentile, 0 represents 0 percentile. If you're not familiar with percentile as just a term, then you should go study statistics, or you should learn how to Google, or use ChatGPT. But basically it is this. So let's say, for example, something is in the 99th percentile. So for example, this read right here is pretty damn close to that. It's actually 98 percentile. What does that mean? It means that price is currently higher than 98% of the look back sample in this current move right here. So on that exact move, yeah, we're seeing a bit of an outlier, you might say, or it's just, it's getting further and further away from there, obviously. And as you can see, price action over here was, well, doing some of this action, of course. So if it is, on the other hand, let's say 1 percentile, then that means that the current price is is further away by just than just 1% of the prior look back period's price. So it is very, very low in relationship to that versus what we just looked at right here, which is very, very high, of course. Even myself, I like fuck up the definitions of these sometimes, but basically you can understand it as very, very high means that it's very, very far away. Very, very low means that it's very close to or below in that case as well. All right, or just lower than the rest of the data. Lower than the rest of the data. That's the real function right there. It's relative to the rest of the look back period. Okay, and again, the look back period on this, just to put English words on it, 350. So it's looking at the past 350 bars. In the past 350 bars, if it is 99 percentile, then it is greater than 99% of that 350. So that, I don't know, I'm just doing some bad mental math, probably like around like 340, 330-ish and above. And if it's like 1 percentile, then it would be, lower than, equal to or lower than, 3.5. So very, 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 very small there. All right. Okay. Now that we've gotten that out of the way, let's now go into some more examples of how do you actually use this. So when it's very, very high, price action is very far away. When it's very, very low, price action is, usually lower than the moving average, but lower than the rest. But what does that mean in terms of like how to actually use this? Well, you can generally interpret that as when it's very, very high, it is maybe a bit of an outlier. Now, when do you expect it to be very, very high relative to the look back period? You expect it to be high when things are, breaking out. That would be an example when that can happen. Or if things were maybe testing a range high, these are times where you would expect it to be relatively high. And of course, when things are breaking out and it gets a very, very high like this, it can be an indication of an incoming short-term pullback. And if it's within the context of a range, it could just be, hey, this is a good indication that it's around the range highs, probably going to reject, probably could be worth a scalp. By contrast, if things are very, very low, these typically come in around, nice lows. So let's actually go through a few examples. I think it'll start to make a lot more sense when we start to go through this. And this is not the only way that you can use it. This would be a very rudimentary way of using it, and I would not suggest using it in just this fashion. It really needs to be combined with some other indicator. This is a statistics indicator right here, and statistics indicators on their own are great, but I do believe they need to be used in a system. So for example, here we see that things are, I would say, relatively low. Anything below, let's say 10 percentile is pretty damn low as far as I'm concerned. So once price action gets into this region, or once the PMARP gets into this region right here, we can see that on price action, if we go back, that is correlating with essentially this area right here. I'm going to put some green or actually, I'll put a blue box. I think that'll be proper. So we'll start it right there, and it goes to right here. And what do you know? Bitcoin spikes to the downside a couple times within this region, and then it continues on with the upside move. And you can see that PMARP then gets extremely high right here, 95 percentile and above. So what would that mean? Maybe it's time to take a little bit of profit here. This would be a way of maybe using it to scalp, for example. Again, just using it like this, not going to be viable long term. Needs to be combined with something else. But just as a demonstration, you can see that it does have an edge in that regard. Again, anytime that we do see it, generally come below about 10 percentile, it's time to be paying attention, as this is relatively low. Certainly can say lower for longer, but as you can see right here, several spikes that around this region. And what do you know, on the actual chart itself, that would be this low right here, this low right here, and this low right here actually is where it does come in around. And you'll notice that these are all pretty damn good areas, obviously in getting into a position before getting ready for a nice short-term upside move. But what you'll notice here as well is that this price action is in March of this year, 2023. And if you are viewing this at a later date, I'll just kind of spoil a surprise. What was happening in March of 2023, Bitcoin was in a general uptrend, a pretty strong uptrend as well. So that is where I'd bring in the next portion of kind of how to combine this indicator with something else to create a bit more of a well-rounded system. And it really should be contextualized within the current trend. So if things are trending up, we do expect those downside spikes to actually act as, very close to getting a low, or at least a good probability of being, being a nice spike low, like a tradable scalp off a low. But that's within the context of a downtrend, within the context of an uptrend. When it's also uptrending, we do expect it to stay higher for longer as it continues to break out and continue that trend. Because by nature, by the nature of that definition, wow, I am really lacking sleep this week. I got 2 hours of restorative sleep last night. I don't know if I already said that, but it's definitely showing right now. But of course, when things are breaking out within the context of an uptrend, we would expect PMARP to not just be very high, but stay high, because it is higher relative to the look back period. Because a breakout, implies that it hasn't seen, that price or that high in quite some time. So naturally, the indicator will reflect that. So that brings up the next side of creating a potential system. If you are using this for a trending fashion, understand that in the direction of the same trend, you can expect that the extreme reads will not be as reliable for getting, in this case, a spike high. And what do you know? We see an example of that right here. PMARP gets very high, very, very high. That would be, Friday the 17th of March. And what do you know? Bitcoin continues to trade higher than that. Now, theoretically, would it have been a great scalp if you got into this position over here and took it off over here? I would argue, hell yeah, absolutely. In fact, I wouldn't even wait for it to get that high. Personally speaking, anything above like 75 to 80 percentiles when things, can be good for a range play. So that will bring up just one little nuance that I'll kind of give out here as well, is that if you are looking for range plays, PMARP somewhere between about 75 to 82. That's where you're looking for on the highs, and on the lows, you're looking between, it still can go in very low single digits, but anything between like, let's say 15 and lower than that. So that's kind of generally where I look towards if I am going to employ it in that fashion, which I don't do it exactly that way. I actually employ at least one momentum oscillator or volatility indicator to kind of get a bit more of a bias on what's happening. But that would be a good way of just, looking at extreme reads as relevant. So we can also look at something else, which I think is which I actually do think is rather useful. You can also spot divergences using this. It's not going to work, in my experience, as well as a momentum oscillator. Those are going to be much better for looking at direct divergences, your RSI oscillators. In my experience, still one of the best ones, or just the easiest to read, basically. Gives the least false positive signals, but still gives false signals as well. But in this case, you could look at something relatively similar. So what is divergence? Divergence is when you have, obviously, as the name would imply, a divergence between price and your indicator of choice. And, in theory, it kind of makes sense with the PMARP, I guess. So let's say that price is creating higher lows, like you see right here and right here, and PMARP is either going to the same area or lower on the next higher low, creating that divergence. So in this case, we can see right here, PMARP is 9.7. Right here, it is 9.1. Actually, over here, it's 9.4 versus 9.1. Illustrates my point perfectly. So we do see lower reads on the PMARP, implying that, statistically speaking, it is more extreme right here on this one to the downside versus this one. Just making too many X's and O's at this point. But price action is making higher lows. So what is that implying? The trend is strengthening over time. So that would be another means of kind of generating a bit of an edge from it. Again, not my favorite way of using it, but you can make it work, I suppose. Or someone, pretty clever could make it work. Works the same to the downside as well. But again, within the context of the current trend, you really want to be looking at, the opposite of it. So if it's an uptrend, you want to be looking at those divergences typically on the lows. And if it's a downtrend, you want to be looking at those divergences typically on the highs. All right, now that we've gone through that, there's one other way that I think could be of interest to you as well. It's, again, not my preferred way of using it, but I have seen others make some good use of it, and I'm certain that there is some interplay to, to creating value with it, but it would be actually looking at the PMARP and its positioning versus the moving average. So that's the white moving part right here. All right, so that white moving part right now is a 20 simple moving average, I do believe. Let me just double check. Indeed it is. And I believe that's also default as well. And if I were to just give like a very quick way of potentially using this, you could say, or you could view it as when both the PMARP and the moving average are simultaneously at extremes. And when I say at extremes, I mean to the upside above 90 percentile, to the downside like below 10 to 15 percentile. And they both need to be in there at the same time. Then the crossover between the PMARP versus the moving average can sometimes indicate a change or a shift as to when to expect, a move in the opposite direction, basically. So I'm trying to find an example right here, but we actually don't see that happen all that often. Here we go. Here's a perfect one, actually. So we see in this case, PMARP and the moving average are both below the 10 percentile marker right here simultaneously. And we see that the PMARP itself crosses to the upside of the moving average right here. What happens right there? Well, Bitcoin trades more or less sideways and then explodes to the upside, obviously. So you get a nice move right there before further downside continuation. So, looking at that and just saying, hey, I want to take profit, when PMRP is maybe above like 80, 90, something like that, you would have gotten a pretty sweet move there, actually. Then we get several examples over here. Do we see anything that is particular of interest? I'm trying to find where they're both simultaneously there. I think I see maybe right here. Let me see. Do they both get there right there? Yeah, I think they do. Yeah. But as you can see right here, this one does not work out all that well. You do get a small bounce from about 27,920 to 28,205. It's actually like not bad. $300 bounce right there. We're making this video right now in September of 2023. $300 move sounds absolutely crazy right now. And PMARP does shoot up quite a fair bit, actually almost up towards 70 percentile. But then, of course, this one does fail. So it ain't perfect, obviously. That's another reason why I'm not a humongous fan of using it in that way. When it's low, it can stay low for a long time, just like when it's high, it can stay high for a long time. In this case, we do actually have a pretty good example of this one operating in the opposite fashion. PMARP and the moving average are both very high here, well above 95 percentile, crosses to the downside, or we see the PMARP cross the downside of the moving average right here. And what do you know? Soon after that, Bitcoin dumps to all hell. How big was this move? This was from about 29.8 all the way down to 27.9. So yeah, not bad. Rather quick move right there, and then regains itself, of course. Anyways, I think that's a good place for me to be leaving off on this particular video. I want to make this one, on the more digestible side, giving you some practical ways and tips of how to use the PMARP. Again, it's pretty much a completely new indicator. So while myself and Caretaker have made this, that's not to say that there are many other ways of using this. We use it in a lot of our systems right now. It's really amazing in my opinion, but I'm sure that my point is that because it is so new, I'm sure that you will, if you have your own ideas, probably have your own means of using this yourself, which can be completely different than mine, or the way, or kind of the more basic ways that I'm outlining here on this video. So I think that'll do it for today. Again, if you're interested in a Bitcoin-centric analysis, you can just watch any video from the past 3 weeks. It's all the same shit. It's fucking boring, man. Super boring. So we'll continue on with series like this on Saturdays, assuming that, there's really not too much to be updating on Bitcoin or, anything of interest. And I think we'll leave it right there. Let me know your feedback in the comment section, just like if this is something you're interested in, or if this is a bunch of bullshit and you just want to be looking at some Bitcoin sideways price action. Me too, man. Get out the fucking sandpaper, huh? Anyways, yep, we'll cut it there. As always, I want to wish you the best bets. Take care, much love, and see you hopefully Sunday.